We're talking gold now in the context of recent market activity with a focus on supply chains. What we've learned from the fast spread of the coronavirus is that the longer the supply chain and the more diverse, the more difficulties that sector has in bringing manufactured goods to market. Well, Simon Popple joins us now from the Brookville Capital Intelligence Report, and he's looking at this in relation to gold. Simon, welcome.
Hi.
You made it into the office. That's good news. That's a good start because we're seeing Italy at the moment in lockdown. But we're talking about a commodity which a lot of people are talking about in the context of the lockdowns and the coronavirus generally.
Sure.
Before we get on to the subject of supply chains, can I get your view on what's happening with the price of gold? Because it seemed to stop going up just at the point people expected it to race away.
Yeah, I mean, I think there's a lot of sort of similarity with what happened in 2008 with gold at the moment and the gold miners, because there's a lot of people scrabbling around trying to liquidate positions to cover margin calls, and it's much easier psychologically to sell a profit-making position than a loss-making position. And I think this has caused a lot of people to sell both physical gold and gold miners to help them raise capital for other situations they find themselves in.
So the big question is, and I ask everybody that talks to me about gold at the moment, is where do we go? If we go back to the chart, you can see clearly that we touched 1700, which was a figure personally I was looking at technically, and it pulled back from there. We're now, 1661. What's the best case for where we go from here? Well,
I mean, I think gold's sort of good days are ahead of it rather than behind it. So I can see the price actually going higher, potentially a lot higher. I think a lot of where it goes will depend on numerous things. Coronavirus is obviously one of them, but before that we still had escalating debt, we still had Brexit, we still had trade wars. There was quite a lot of quite a lot of situations that were, let's say, in favour of a higher gold price. But the coronavirus has perhaps, because it's sort of very much in people's faces, has meant that perhaps at the more retail level gold has caught a bid. But yeah, I think the gold price could go significantly higher than 1700.
Yeah, well, I know you're not an analyst, so I'm not going to ask you about targeting as such. But let's talk about this though in the context of the coronavirus, because a lot of things at the moment seem to be linked to the coronavirus. Where we're listening just recently, all the commentary around the drop in the oil price linked to the coronavirus. What's your comment around gold, where we are, where it's going, about the coronavirus specifically, and in the context of what you're here to talk about in terms of supply chains?
Yeah, well, I mean, I think there's two things really. First of all, the supply chain for gold is normally a lot shorter than it would be for a manufacturing or service business. Typically the gold is, the deposit's found, you mine it, you then transport the ore to a processing plant, which quite often is not that far away, and then the ore is processed into gold doré or refined gold or whatever the plant is set up to do. But the point is the value has really been created at the sort of earlier stage in the process. Whereas if you look at the majority of manufactured components, let's say a television or iPhone, iPod, whatever it is, there's a lot more that happens to get the components to the assembly, and that's really where a lot of the value is added at the latter stage of the process, where you've got intellectual property and obviously the retail market where the product is actually sold. So where you've got coronavirus and perhaps concerns about coronavirus, because there's so many more links in the chain, the chances are greater that there could be a potential problem in bringing that product or service to market.
So how will this impact investors and traders?
Well, a lot depends on how long the situation goes on for. But what I like about the gold companies, because the value's been created earlier in the supply chain, I feel more comfortable that they can deliver the revenue, the profit, and ultimately the dividends to the investors. Whereas if you've got a longer supply chain, if anything goes wrong in that process, then I think some of those companies will have more challenges, and whether or not that affects their dividend, I really don't know. But if this virus does go on for a long time, I think there's a greater chance of companies experiencing problems.
Yeah. Just one final point about this, the gold price, where we're going and so forth. To what degree are we in a situation now where we are looking at levels? We've already seen the gold price at 1,700. Now this gold price brings on a lot more producers, because the marginal producers, and the price is just below where we were, now all of a sudden can produce gold, can mine for gold. It means that there's more possibility that more gold comes onto the market, and of course the higher the price goes, the likelihood is we're going to get more and more gold miners come in. What is the setup at the moment in that respect? Could that be a break on the upside for gold?
Well, the increase in gold supply is around 2% a year. Now you compare that with the increase in the money supply, which is in the US, I think is running more like 7% a year. So even if the gold supply did increase, I don't think it's going to increase by that much. I mean, you're absolutely right. A higher gold price will mean that more gold is economic to mine. But in the overall scheme of things, I think that if people really want to buy gold, whether they pay 1,700 or 1,800, I don't think they'll really care that much. I think they'll want to be in the market, to have an asset that's physical, tangible, and so it could impact the price, but I don't think it's going to have a massive impact on the price.
Okay, all right, Simon, thanks for joining us.
Thank you.
Simon Popple joining us there from the Brookville Capital Intelligence Report. You can catch up with Simon on his website and download some of the reports that Simon produces for his clients.